Good morning, everybody, and thank you for being here. And I just want to start by thanking our hosts in Morocco for what has been an amazing experience thus far. When the earthquake happened, everybody went through the doubts that we all went through. But not only has the Moroccan government done a good job of dealing with their own situation on the ground, the tragedies they're dealing with, but they've also been amazingly helpful in helping us get all this set up, and our amazing hosts. And I've had a chance to visit a damaged school in the Atlas Mountains and see their work firsthand. And for those of you who would like to know a little bit more about it, either get a chance to go see it yourself or catch up with me, and I'll tell you the kind of things we saw. But it's just, to start with, I want to thank them. Some of you know me well, some of you don't know me, and I thought I'd spend just a few quick minutes before we start taking questions from you on what I've been doing in the 130 days that I've been in this job. So when I got nominated a few months before that, I went on a tour of a few countries around the world, and I also got a chance through that process, through different meetings, to meet close to 90-odd governments and about 100-plus civil society organizations and 15 or 20 CEOs of asset managers, pension funds, and operators in the field in emerging markets. And since then, I've been to every continent again. I've been back to Latin America to go to Peru and Jamaica. I've been to Africa and visited more countries here, including Nigeria and Ethiopia. And I've been to India and Indonesia, and I've been to parts of Europe. And I'm trying to get to the Pacific Islands early next year. And so I'm trying to make sure that I can get to as many places in the field where I can meet our clients, that's the countries, but also meet the employees of the bank who are working in those locations. The first couple of things I've picked up during these trips is the idea of intertwined challenges. And what I mean by that is that the effort to segregate challenges into poverty separately from pandemics, separately from food insecurity, separately from climate change, this idea doesn't work in real practice on the ground to people who are dealing with the way in which these challenges confront them and come together. It's almost like a perfect storm in some ways. So I was in Kenya and I had a chance to meet President William Ruto in my nomination days and met him a few times after that. But during the nomination, he said something to me that stuck with my childhood in India, which is that, when you are a farmer and you rely on rainfall to be able to produce multiple crops in a year, so when you get those multiple crops, you're able to have the surplus that allows you to have cattle. When you have cattle, you get dairy income. When you get dairy income, that's prosperity. You start hiring a farm laborer. And what do? You get your kids off the farm and into school, including, most importantly, the girl child. Guess what happens when you don't get that rainfall for 4 years, which is what Kenya has just been through? You don't get that second crop. You don't keep that cattle as a result. You don't get that dairy income. And what do? You get rid of the farm laborer. And what's next? You take the children out of school back on the farm, starting with the girl child. If you describe the importance of reducing poverty by including the education of children and getting them to be part of the future, you just turned that back with 4 years of issues with rainfall. And so talking about these as separate is just not the right way to think about it. You need to think about these issues as intertwined and complicated, therefore. That's why what we're trying to do in the course of this entire process of this annual meeting and seek approval from our governors is to redefine the vision of the bank to be that of eradicating poverty, but on a livable planet. And what we mean by livable planet is exactly these challenges of pandemics and climate change and food insecurity and fragility and those kinds of issues that we refer to. The second thing that came across very clearly is that climate change tends to mean different things depending on where you're coming from. If you discuss climate change as being only the avoidance of carbon-intensive growth, as in the emissions from energy generation principally, but also transportation and construction material, then that's one definition. But when you live in the global south, that's not their definition. Their definition is loss of biodiversity, forestry cover going, less rainfall, challenges with the soil degradation. See, that's their visual, that's their issue of climate change. And then it gets exacerbated with crisis events of hurricanes and weather events they can't deal with. So if you're on a Caribbean island, no matter the fact that you happen to be a middle-income country, one hurricane takes away double digits of your GDP. And when that happens, that's a crisis no matter what your per capita income at that time. And so I think climate change means different things to different people, and therefore being careful about investing money from both sides, both points of view, is kind of important. One of the things the World Bank is doing is to put 50% of its money that goes into climate work into mitigation, which is the avoidance of future heavy emissions growth kind of patterns, but also 50% into adaptation, which is all the other aspects of climate that I was just referring to. The third thing that I kind of came across was, therefore, a desire for the Global South to feel that their voices were being heard in the manner in which development and putting money into their countries was being addressed. And it includes everything from the challenges with the debt situation that a number of countries are in, but it also includes how to prioritize and work in their countries. And so that gets to the mission of the bank, where we are, in addition to other things, very clearly emphasizing the inclusion, in particular, not excluding others, but in particular, women and young people. And why is that? Women, obviously, 50% of the world's population. If they don't participate actively in this economy, you cannot kind of move the world economy forward when half the population is watching you from the sidelines. The reality of labor force participation by women in the world is that it has not improved tangibly since 1990. We know that even in the developed world, they are not paid equally. We know that venture capital money, even in the developed world, is not available to women entrepreneurs in the same way that it is to male entrepreneurs. We know this. This is not rocket science. Including women in the idea of inclusion at the core of the World Bank is really important. The second one is youth. The Global South is blessed with a demographic dividend of many young people. And that is true, and it is part of the optimism and hope and energy that these countries display. The reality is, these young people, when they're growing up, they must get access to clean air, clean water, health care, education, quality of life. Once they've grown up, they need a chance to get a job. A job gives them not just the ability to provide for themselves and their families, it gives them dignity and pride. It is really important if you want to channel the demographic dividend into being a real dividend and not a challenge for the Global South. And therefore, for all of us who work with the Global South, including women and young people, is going to be a very critical part of the World Bank's mission as we go forward. So, livable planet in addition to eradicating poverty, and the idea of being inclusive of women and young people, as in particular, is important, along with all the other things I talked about of what livable planet means. Now, the last part there is to do with the bank and the way the bank works itself. And a great deal of work has gone into the capital adequacy of the bank. Even before I joined in the spring meetings, the bank was able to move its loan-to-equity ratio, and that generates $40+ billion of additional lending capacity over the coming decade. We have since done a lot of work on portfolio guarantees and hybrid capital, including approving the use of special drawing rights if countries can give them to us, which is challenging and which has been an issue. But we learned from what the African Development Bank and the Inter-American Development Bank were doing with SDRs, and we brought them into our opportunity set as well. So both hybrid capital and portfolio guarantees are ways for countries and donors to put money into the World Bank's balance sheet without altering the shareholder base of the institution. But they are leverageable money. Every dollar you give me, I can leverage 6 to 8 times over the course of a decade. We believe that with these instruments, along with the first instrument of the loan to equity, that we could get to $150-odd billion of incremental lending capacity over the coming decade. Now, you put that in contrast to what we do every year, and you're talking about 15-20% greater capacity than where we were today. It's a substantial number, but it's not going to be enough for the kinds of challenges the world has ahead. And therefore, the second part of what we are trying to do is to look at every other place where pools of money exist, which could be used or redirected, whether it is subsidies in the world on fuel and agriculture that cause environmental issues as well, or whether it is voluntary carbon markets. These are all longer-term challenges. They won't solve and won't raise money in a year, but that's things we have to focus on. Or whether it's the private sector and its ability and its capability to bring its capital and its technology to work in different parts of the world, in business models and in risk profiles that they can understand. So can we help them with the risks they don't comprehend? Can we help them with certain kinds of political risk or certain kinds of foreign exchange risk that may be outside their capacity to build into their business models? All those are thoughts that we're working through. We've set up a private sector investment lab that's co-chaired by Mark Carney and Shriti Vadera, 15 of the world's leading asset managers and operators, people like the Tata Group, people like BlackRock, people like 91 from South Africa. Others are part of this, and their job is to help the bank think through what we can do better to help them bring more money to work in the emerging markets, in particular on renewable energy and energy infrastructure to start with, but then into other parts of what they could be helpful to us with. Having said all that, all this is part of what I call the better bank, and you've heard this probably repeated in sometimes. The idea of a better bank is a bank that works better with itself, is more efficient in its own processes as well. It takes 27 months for a project to go from the time we start discussing it till it's approved. It can take sometimes up to a decade for that project to be implemented in the field. If you could cut that time down, development delayed is development denied. And so that's one of the topics we're working on. Similarly, replicating and scaling things that work. I went to Peru. I saw a women's legal aid center, which we had funded. It had 20 lawyers, and those lawyers are there to help women get access to help for either pension payments or abuse, sexual and domestic abuse. The people are doing an amazing job. Close to 200 women a day were coming there for help. If you've got one such center, why not 10? If you have it in Peru, the fact that women are going through these challenges is not unique to Peru. And so why not do it in others as well? These are the kinds of ideas of scalability and replicability that I want to incentivize inside the bank, because I believe that that is the way for the bank to be seen as a better bank. Faster, but scalable and replicable in what it gets done. And then partnerships, not just with the private sector that I spoke to, but other multilateral banks. If you are a small country or a country that's trying to grow and you receive a particular project where 3 or 4 multilateral banks are investing together, you as the country have to sometimes prepare 4 project approvals. You have to deal with 4 standards of procurement. So you can imagine the work and load that places on the scarce resources that country has. I think it's incumbent upon the multilateral banks to find ways to standardize these things, to find ways to make it easier to co-invest, and you will see a lot of that discussion over the coming couple of days, including at our development committee over the next days. So the idea is to work better with the other MDBs. In my first trip to Latin America, I asked the head of the Inter-American Development Bank, Ilan, who's an old friend and colleague and my regulator at one point of time, actually, in my prior life. And we traveled together to Jamaica and Peru, and we concluded 3 things we would work on together, in addition to what they do really well and what we do. And that was to work on the Amazon and getting funding for work in the Amazon, to work on climate impact in the Caribbean, and to work on using digital tools to get past the challenges of learning development that children had faced during COVID. So just 3 very specific focus areas. Every 6 months, he and I will assess how we are doing on those 3 together with our teams, and hopefully bring about partnership and collaboration rather than a broadening of the people that a country has to deal with at the front end. So kind of bring it together. The last part on that is the bank itself. Our clients complained to me that they felt that we had silos in the bank. We have IBRD, IDA, IFC, MIGA, ICSID. These are all great acronyms that add up to what the bank does, from dealing with really poorer countries who need more grants, all the way to private sector investing, as well as the provision of guarantees and the provision of settlement of sovereign disputes, of disputes with sovereigns. We do all that. So what we're trying to do is to get those to not be siloed, but to come together. Give you an example. We do guarantees in a number of our locations in the bank. If you bring them together in one place, they'll be more efficient, more available to all the different institutions to sell to a country. The country won't have to go to 3 places to get their guarantees. These are all relatively obvious things to do. They're not easy. They're part of deep cultural change in an institution that has a proud history and done an amazing job over the last 78 years. So this is not about that. This is about making it future fit for the next 40 to 50 years. When you meet the people in the World Bank and you talk to each of them individually, they are outstanding people. You want them on your side. Their knowledge, their experience, their ability to have lived and worked in multiple countries in difficult circumstances, dealing with difficult challenges is second to none. I would have nobody else by my side while getting this done. The idea is, how do we make the bank relevant for the next 5 decades, not just the past 78 years? That's kind of what this is about. So with that, I will pause and take questions from you. And we get going, David?
Good morning, everyone. I'm David Tice, the World Bank's press secretary. We have roaming mics, so once I call on you, if you could wait for the mic to get to you, that would be great. Before I start, I would just want to introduce Indermit Gill, the World Bank's chief economist, who Ajay has invited to join us this morning. Welcome, Indermit. Thanks for coming.
He's going to answer all the difficult questions you guys asked. So
Great, thank you. I want to start off with our host country. I see Tuan Marak has her hand up. If we could get the microphone to the woman with the tan jacket, thank you.
Good morning, Mr. Banga. I'm Lina El Wafi, Moroccan journalist for Deuxième TV. So knowing that at the moment 50% of the world's bank financing aid is dedicated to Africa, how could the current annual meetings, half a century after being held in the continent, optimize the tangible impact of the most vulnerable nations, knowing that Africa is home to the world's youngest population with over 400 million young people?
So first of all, thank you for that question. Please sit. And please call me Ajay and not Mr. Banga. And please, nobody call me President, please. It makes me allergic. So just call me by my name. It is correct that close to half of our volume of lending goes into the African continent. It is also correct that this is after 50 years, I believe, that the annual meetings are being held on the soil of Africa. My belief is that the level of growth of population in Africa over the coming years and the opportunities that Africa represents, therefore, for world growth are second to none. The question really is, how do we surmount the unbelievable challenges that exist on the ground in Africa to enable that to become something more? And that includes everything from very simple things that people outside don't understand, but those of you who live here do. The ability to transport goods across African borders within Africa is unbelievably complicated. It is cheaper to take something from an African country to a completely distant offshore port to bring it back to an African country than it is to move that produce or that product from one African country to the other across their own borders on the continent. That has everything to do with logistics, but also to do with the simplicity of documentation across borders. There's so much work to be done on that. There is the African Free Trade Commission that the bank is an active supporter of. I've said this to African finance ministers. I believe this topic deserves much more attention. You cannot solve it for the continent as a whole, but you can solve it by starting by smaller regions in the continent, looking at how you can promote intra-regional trade in Africa. Just one example, to create jobs for young people. There are other issues to do from the basics of education and healthcare, including skilling institutes as the children grow, so they get a chance to be skilled appropriately for the kind of jobs that could be created in that country. That's another thing to be done. In the middle of all this is the challenges of climate and pandemics. And climate, as we talked a little bit at the beginning, so I won't repeat that. Pandemics, it's not just the access to vaccines that we all unfortunately saw firsthand during the COVID situation. I believe the correct long-term answer for access to medication and devices in Africa is for making those things in Africa for Africa. You need the technology and the partnerships of generic manufacturers and device manufacturers and other pharma companies to come in here. I have found great encouragement among the pharmaceutical companies to be a part of this. Your own country has an amazing entrepreneur, a lady whom I met day before yesterday, who has 3 pharmaceutical factories, generics, on the ground here, and is looking to set up a 4th in another country close by. And if people like her and others whom I've met could be encouraged to do this, you would solve some of the supply chain challenges that we saw in the past pandemic. And we all know the next one will come one day. The question is when. And we should not be caught in the same circumstance. So there's many parts to your question. What I'm trying to get across is that it needs local thinking, local cooperation, intra-regional thinking as well, not just multilateral money. We can be helpful. We can be helpful with our knowledge, which is very valuable, which we do with a lot of countries. Your own country is a great partner for us in different development plans over the years, including your new development plan that you're going through right now. So that is important. And the last part I'd say is that I'm trying to move the bank from being evaluated on dollars and projects funded to being evaluated on output, on impact, meaning how many girls went to school because of the schools we built, how many people got a better job than earlier because of the skilling institute that they were able to attend because of the cooperation we put in, how many carbon emissions were avoided because of the work we did, how many private sector dollars got crowded in for every dollar we put in, as compared to how many projects and how many dollars we put in. Trying to move to an output rather than an input, and that will be really important for Africa's growth. So thank you for that question.
Great, thank you. We're going to move to this side of the room. There's a gentleman in a black jacket there, please, with his hand up. Thank you.
Thank you for doing this. Wieland von Petersdorf, German newspaper, Frankfurter Allgemeine Zeitung. I have a question to the lending capacity of the World Bank. G20 countries promised or advertised that they would strengthen the lending capacity of the World Bank with different tools, and I would like to know which country put real money out there to strengthen the capital of the World Bank, and do you expect that the United States is able to live up to their promise because of the dysfunctional Congress?
So, the United States announced, the United States announced a fairly large package of money into the capital adequacy things, including portfolio guarantees that would increase our capacity by $25 billion over a decade, but also contributions to a fund I didn't get to mention, which is a global public goods fund in the bank, which allows us to use concessional money for incentivizing global public goods in countries, which could have impacts across their border, not just in their border. And they put $1 billion forward for that, and they also put money for replenishing the IDA crisis window, which is a real worrisome issue for me, the replenishment of IDA that's required. Yes, it has to go through Congress. Am I hopeful? Very much so, because I think in Congress there are plenty of people on both sides of the House, as well as both sides in the Senate, who understand the value of the multilateral banking system as a key way for the Western and developed world to continue to do the right thing around the world and in turn help themselves. So I'm kind of hopeful. I'm certain there will be arguments and discussions. That's the nature of our democracy, but I'm not at all concerned that the administration will not be helpful in putting this forward and putting it forward well. Other countries have contributed. Germany has put in money into the hybrid capital instrument. And in fact, that alone gives me another $2.5 billion of lending capacity over a decade. The German chancellor was the first one after the United States to step up to put that money in. There are a number of other countries, the Nordics, the Saudis, others who are discussing with us different aspects of contribution to these instruments. I'm quite hopeful that over the coming weeks, we will get to that. That's how the $150 billion number of extra capacity, 40 to 50 from the loan to equity ratio, about 100 put together from all of these. So there's a lot going on that front. And to be honest, I find the countries actively engaged. The United Kingdom has gone and made an announcement in Parliament looking for a capital increase of the IBRD, which is the next phase. I believe that all the things we are doing with the Better Bank or with this capital adequacy framework will not be enough. Even the partnerships with the private sector, at the end of the day, will require us to have a bigger balance sheet ourselves, because we will have to be partners for them by absorbing either some of the risk or creating the right avenues for them to grow. There is no doubt that we need to be a bigger bank. The G20 expert group has put out its own thinking on that. That has not yet been accepted by the G20, but Larry Summers and N.K. Singh drove this group of eminent people. There's a lot of numbers in there for you to see. My belief is better, get capital adequacy going, make the place work quicker, faster, better with other partners, but then I am definitely going to go back to our shareholders to seek a bigger bank, because I believe that is what the world needs for the next coming decades.
Great, thank you very much. We're going to move back to the middle. There's a woman with glasses and a blue top right there. Thank you.
Hi, Aline Bronzatti from Agência Estado. Thank you for having me. Latin America started the cutting of rates. How can you see the international scenario considering their high interest rates in advanced economies, the peaking the treasurers' yields, and now with one more shock because of the conflict in the Middle East impacting the emerging markets, especially Brazil, you know, the potential of these countries attract foreign investment, and how can World Bank can be more, to do more for these countries? Thank you.
Thank you. So I'm going to get Indermit to talk a little bit about the economic situation. But let me start by two things. The first one is I had the pleasure of catching up with your president both in Paris and in Delhi. And we talked about the progress you are already making as a country, not just on deforestation, which is amazing. It's a complete change, but also on stability and fiscal reform, which he has committed to apply. And I think that the point I want to make in that is that countries in a time like this need to be very careful about macro and fiscal stability. It is really important. The best way to protect yourself is to start from home. And I think countries that do that well will see themselves coming out of any cycle in a better place. Having said that, to step back for a minute, overall, I believe that the world economy actually has shown itself in a better light than we all would have expected this time last year.
Yes, that's true.
And you want, is that mic working?
I think it'll work when you don't speak. Okay.
All right. That's one way of saying, why don't you shut up? So
No. I think you're doing very well. So continue.
In addition to that, there's no doubt that inflation has begun to come down. I do think that interest rates will stay higher for longer. That can be a complicated event in many ways, both for investments as well as for people who over the years had got used to a lower interest rate environment. I think those are the plus and minuses there. I believe that wars are completely and extremely challenging for central banks who were trying to find their way out of a very difficult situation to a relatively soft landing. Indermit educated me over the last few months about the challenges on investment and trade flows, particularly in our client countries. But that's kind of what I am concerned about. He can talk to you a little bit more about that, but also about a few recommendations of how we can get things to improve.
So really quickly, I took notes because Ajay spoke with me about 3 or 4 days ago, and he said that he'll take all the questions about the World Bank and I'll take all the questions about the world economy. And the World Bank is getting stronger and the world economy is getting weaker, so I have all the tough questions. Now, but I'll start with the good news. The good news is that there are a few bright spots, like the US and India. The other good news is that...
Come here, use this. Use these mics. Use this mic.
But the other good news is that in spite of all of these shocks, we have not seen any big economy really get into trouble. Right? But the good news basically ends there, right? The trouble now is that because of the high rates, the high interest rates that you mentioned, growth is slowing down a lot. The big problem is that growth is slowing down to levels that are much lower than what we had seen before the crisis. To answer your question about what would be the impact of these high rates, the best way to think about that is to look back at the last time that the Fed raised interest rates. And that was in the 70s. There are 2 or 3 things to think about that. The first one is it took a long time. It didn't take 1 or 2 years, so we should expect this tightening cycle to also take long. The second one is at that time, it left about 24 economies bankrupt. So you have to expect that countries that did not manage debt levels well and so on, that they actually got into trouble. and we should expect some countries to get into trouble now. The third thing, I think, is then what should countries do? The first thing is that we know that even countries that are not in debt trouble, because they have high levels of public debt, those public debts are crowding out private investment. So if you look at Brazil, for example, if you look at some of the other countries, they are not in debt distress, but because of this crowding out effect of high public debt on private investment, Brazil's growth has been slowing down steadily. And you're seeing that across the world.
So I think that's why I was referring to macro fiscal reforms and stability is very important. I think the other part is this whole debt situation, and I'm sure somebody will ask me about that, but I'll hold it for that.
Okay, thank you very much. Second row here in the middle, please, with the hand up with the pen. Thank you.
Larry Elliott of The Guardian. I'd like to ask you about debt. Do you think that the burden of debt is hindering progress towards achieving the SDGs and net zero? And if so, isn't it time to move on from the common framework approach to something that is speedier, offers some real debt relief rather than no debt relief, and is a bit more comprehensive than the common framework's country-by-country approach?
So first of all, there is no doubt that that debt burden hinders development. And whether you measure that development output with SDGs or you measure it with local circumstances for every country, the reality is it hinders it because it crowds out the ability to invest in the things you need to invest. The question of should you replace the common framework with something, you got to have a really good idea of what you think that something is before you blow up the only thing that's beginning to work. So, Zambia got out of their debt situation after a long process, but we're seeing progress with Ghana. We're seeing progress with other countries as well. The reality is that what you need to do is to get the form of debt has changed in these countries. Overseas debt I'm talking about now, not domestic debt, which Indermit just referred to. But the form of debt and the contribution of that debt has changed, where earlier the so-called Paris Club used to be the largest contributor to that debt. Today you have the non-Paris Club countries adding to the bilateral debt in these countries. And you have commercial creditors as well. The markets have completely changed from 25, 30 years ago, when most of the debt came from the Paris Club countries. And I think, therefore, making sure that all these people are at the table together and that the debt that they have to these debtors is clear, transparent, and enumerable. So you will find a lot of the debt has covenants and pricing that is also covered in confidentiality clauses, which didn't allow for them to be clearly mapped and understood. If you don't understand what the numbers are, no new framework will change that. You first need to get the facts, and then you can sit down together and negotiate how to get that debt down. I'm a believer that that is the right way to get it done. I wish there was a magic wand that said, abracadabra, we'll just wipe the debt out of the system. I don't think that's likely to happen. I think this is hard work, and it needs to be done the right way. So at the end of it, we come out of this, where the World Bank, for example, in Zambia, since July, has been giving only grants to the country. We're not lending money. We're only giving grants to the country. In fact, if you look at the 4 countries in the common framework, Chad, Ethiopia, Ghana, and Zambia, for the last 3 years, the World Bank has put in close to 12 billion into them, of which about 6 billion was pure grants, and the rest was concessional money. And by the way, of that 12, 6.5 billion was net positive, meaning it's not being used to pay down other debt. So I don't think those are the issues at hand. I think the issues are country by country, get the facts on the table, agree on a debt write-down, get the creditors to agree, and move past it, and then get better regulatory and macro and fiscal frameworks into these countries so we don't fall into the same trap 5 years, 10 years, 20 years later.
Good, thank you. We're going to go toward the back in the middle, in the pink jacket, please. Young woman there, thank you.
My name's Uche from China Global Television Network, and I just wanted to ask you, as you redefine your vision for the bank going forward. How are we going to see that relationship with China changing? Do you expect to see China playing sort of a broader role going forward?
Thanks. Look, China is I've said this publicly, is a very constructive partner at the bank. I was meeting with the Chinese finance minister, the prior finance minister, a little while ago, and one of the things we talked about was the things that they have done in their development that could be useful as part of the knowledge bank for other places. So, we were investing in Indonesia in stunting reduction for growth in children, which Indonesia is doing a terrific job on. And we took learnings from Peru. Turns out there are amazing learnings in China as well, which could be applied and used. So I think there's the changing role of China, like it was for South Korea some years ago, is that no longer do they need as much money from us. Korea doesn't need any, it's only a contributor. But China is still a contributor and a receiver of a small amount of money. But what they really are is into the knowledge exchange system. So what they want to work with us on going forward is climate, healthcare for older people, and rural development. To be completely honest, those three topics are fungible across many borders into many countries that I believe the World Bank can be constructive on. And so we're going to try and find a way to work on those kinds of issues where their knowledge or their desire for knowledge corresponds with what we can help with. By the way, on the prior question on debt, I did forget to say one thing. There is a sovereign debt roundtable that the IMF and the World Bank have put together, which goes past the common framework and creditors. And the idea is to get the Paris Club, non-Paris Club, private creditors, everybody at one table, and start discussing how to hopefully not repeat this error, but also how to move the process through speedier. And I think a little bit of the progress on Zambia did come from that sovereign debt roundtable, and the progress we're beginning to see on the other countries also comes from that. At that sovereign debt roundtable, we also discuss countries beyond those that have registered for the common framework, like Sri Lanka.
Thank you very much. Great. I'm going to go to the middle, toward the back, one in, the woman with the hand up there, please. Thank you.
I'm Maryam Ouazani, a Moroccan journalist. I would like to have your view as the new president of World Bank on what strategy would be the most efficient for developing countries, but also middle-income countries to progress on developing human capital and reduce employment.
In fact, I'm glad you raised that. That's one of the topics I was discussing with your Prime Minister over the last, I think a couple of days ago, that as part of this new development plan, the effort that's going into human capital and job creation is quite important. Like I said, young people in the global south, that is what we have to do, create jobs for them. You're not going to create jobs from the top. You have to start from the right education and the right skilling institutes, and then create the right environment for businesses, entrepreneurs, and the like to flourish. And we've discussed a number of interesting ideas with him, which are in the plan. We've been very helpful in the past with schools. We're trying to expand not just that, but go to higher education and skilling institutes with Morocco and partner with them and other countries like that on the space. I've visited skilling institutes in a number of countries now that the bank is running. I've also visited entrepreneurial sort of incubators. In Nairobi, we have an incubator that's connected to climate, meaning young people who want to launch ventures that have an impact that is useful for the climate, ranging from, biofuels that could be used to processing of fruits to how you use water in a home. Those kinds of people get a home there where they get in that incubator access to not just a network and technology and others like them, but also to some amount of capital. And interestingly, 3,000 businesses have been through that incubator since it started. And of that, 60% were run by women. And I met 4 or 5 of the businesses there, and you can see the growth and energy and the jobs they're generating. So there's a series of these things that are part of the World Bank's playbook, which we are discussing with a number of countries. I believe that the most important thing the bank can do is not just be a money bank, but be a knowledge bank. And the knowledge bank idea is to have the right policies, the right regulations, the right principles in place to create the right foundations at which money then can be put to use to help deliver that growth. We've got a lot of people who do that. They're very talented. They write about a number of topics in the world. I want to get them to focus on the country strategic partnership frameworks that we draw up with every country, including with Morocco, and get the knowledge that they have put into that framework so the right priorities are agreed on day one for the next 3 years. And then the money goes into those. When you create the right way of thinking, which Morocco has done with us well over the last few years, I think you can get much further than not having the clear principles agreed right up front. So the bank can be very helpful in knowledge. We're trying to construct our knowledge bank on 5 verticals: people, prosperity, planet, infrastructure, and digital. People is education, health, social transfer programs. Prosperity is jobs and access to credit for MSMEs and others, as well as trade and economic policy. Planet is mitigation, adaptation, biodiversity, water use, forest, infrastructure, everyone knows, and digital because it's impacting everything from governance to inclusion. And then at the bottom, I want to create a way of measuring impact, which I was referring to, is to how many women went to school, how many women got a better job, how many people got a better job because of skilling institutes, how many private sector dollars, emissions, that kind of way of measuring what we are delivering. That knowledge bank to me is the most important part of our institution to get the right framework going for our money to be put to use.
Great, thank you. That'll be the last question for the day, but before we go, I just want a brief housekeeping note. I know that regularly the plenary addresses on Friday are sort of a report to shareholders, but I would encourage you to attend this one because I think Ajay is going to be giving a different kind of speech than you've seen from World Bank presidents. So Friday morning, please come. It's open to press, and I encourage it. Thanks all very much for coming. Thank you, Ajay. Thank you, Indermit.